Home prices keep going up, which is great for homeowners, but now we're starting to see a really strange shift in the housing market because we already have millions of Americans in forbearance on their mortgage, and now the number of new people applying for forbearance, so the number of new people who can't afford to make their mortgage payments, are starting to go up as well. What's up, everybody? I am Jaspreet Singh from theminorityMindset.com and welcome to The Minority Mindset. The housing market is in a very weird place. On one hand, we have home prices that keep going up, and on the other hand, we have millions of people that cannot afford to make their monthly mortgage payments, but we're not seeing an uptick in foreclosures right now because the United States government created a forbearance program which lets homeowners put their mortgage payments on hold if you have a mortgage that's owned by the government. So this is 70% of mortgages in America. Then you have the option to put your mortgage payments on hold for 180 days. And if at the end of the 180 days you still can't make your mortgage payments, then you can elect to extend your forbearance for another 180 days. If you're one of the 30% of Americans that does not have a government-sponsored mortgage, then you have to reach out to your lender directly and see if they're willing to extend you some sort of relief or some sort of forbearance program. The interesting thing about this forbearance program is you're not required to show any financial hardship in order to qualify for forbearance. So if you lose your job and you can't make your mortgage payments, you can apply for forbearance. And if you just don't want to make your mortgage payments right now because you don't feel like it, you can also qualify for forbearance. Right now, at the time we're recording this video, about 5.9% of homeowners in America are in forbearance. That's about 3 million households that are not paying their mortgages right now because they have applied for forbearance. Now, if you add up the principal loan value of all these 3 million homes that are not making their mortgage payments, that's about $619 billion of unpaid loans that 3 million Americans are not paying interest on right now. Now, I already made a video where I went over why housing prices have not crashed yet. If you haven't seen that video, I encourage you to watch it, and I'll link it for you in the description below. By itself, these numbers really don't mean anything. I mean, yeah, it is very bad that 3 million American homeowners are not paying their mortgages, and it's really bad that $619 billion worth of loans are not being paid. But in reality, this really doesn't mean anything because we're in the middle of a pandemic and we have government programs that say that this is okay. The thing that we really need to pay attention to is when this forbearance program ultimately ends, how many Americans are not going to have the means to continue paying their mortgages, because that's where the real issues will arise. Anybody can say, oh my God, 3 million people are not paying their mortgages, we're going to see a whole financial meltdown. But the real question is, what is this number going to be when this forbearance program ends? Because if this number is 25, not 25 million, just 25 people that aren't paying their mortgages, then there's no problems. But if this number stays at 3 million, then we have big problems. That's why what you want to pay attention to right now is not what these numbers are, but what the trend of these numbers are. Forbearance applications piled in March, April, and May when this pandemic first hit and when the lockdowns first came into place, because all of a sudden so many Americans lost their jobs, they lost an income, and they did not have the money to make their mortgages, so everybody applied for a forbearance. Then after May and June, then we saw these numbers come down quite a bit. And now what we're seeing happen is the number of people that are going into forbearance are actually going back up. What everybody expected was, okay, this is March and we would see this huge wave of forbearances, but slowly after that, the number of people that can't pay their mortgages will continue to come down, because as people get their jobs back and as the economy starts to recover, now people are going to get off forbearance and people are going to start making their mortgage payments again, so this number will come down. But what we're actually starting to see happen is people are not getting off forbearance and new people are coming into forbearance. So we're seeing the numbers start to trickle back up. Like I said in the beginning of this video, this forbearance program by the government was created through the CARES Act. That was our first stimulus plan, and it said that you have the option to forbear your mortgage for 180 days, and after those 180 days, if you still can't make your mortgage payments, then you can extend this forbearance for another 180 days. Well, what we're seeing happen is Americans are hitting that 180-day mark, and then they're choosing to extend the forbearance program. More than 3 out of 4 homeowners that are hitting the 180-day mark are choosing to hit that extension on their forbearance. And now going into December and early 2021, we have 1 million households in America whose forbearance program is about to expire, and we're gonna see how many people need to extend their mortgages again. If things go as expected, a little bit more than 750,000 of those million homeowners are going to extend their forbearance, and we're also gonna see more people apply for new forbearance. Again, right now it really doesn't mean anything because we're not seeing any foreclosures happen, and we're not seeing people get kicked out of their homes because we have this forbearance program. The real question is, what's it gonna be like when this forbearance program ends, whenever it ends, because there's a chance that come March and April, if millions of people still don't have the means to pay their mortgages, we could see a new extension of this forbearance program created, but I'll get to that a little bit later in this video. Let me actually read you this little excerpt from the Motley Fool that talked about how people are not getting off of forbearance and how these forbearance numbers are going up. But before I do that, I need you to do me a quick favor and smash that thumbs up button below, because the way the YouTube algorithm works, if you do not smash that thumbs up button, then YouTube is much less likely to show you and other people our financial news and education videos. So the title of this article is "The Mortgage Forbearance Rate is Up for the First Time Since June," and it says, does a rising forbearance rate bode poorly for the economy? And what they say is maybe. Not necessarily. While the rising forbearance rate could mean that more borrowers are struggling financially, which yeah, I do think that's what that means, it could also mean that there are more people becoming aware that they could pause their mortgage payments. Even if that is the case, I don't think that's good news because you probably shouldn't be pausing your mortgage for the heck of it. Anyways, given the minimal uptake in forbearance applications, there's no reason for a major alarm. It'll be interesting to see which direction that rate trends as we head towards the end of 2020. So what they're saying is these mortgage forbearance numbers are going up either because people are struggling more financially now than they were before, or people are just becoming more aware that you can put your mortgage on hold. Now, I could be a little bit biased, but I have a feeling that a lot of people were aware of this mortgage forbearance program either in March or April or May or June or July or August or September or even October. Why is it that all of a sudden in November, people are becoming aware of this forbearance program? It was all over the news, everybody's been talking about it, and it's all over YouTube. So I'm having a really hard time buying the fact that forbearance numbers are going up just because people are becoming more aware of this forbearance program in November and December of 2020, but I could always be wrong. At this point, you're probably thinking, okay, Jaspreet, so what does this all mean? Now, personally, I hate watching videos and news and reading articles where the author just kind of spits their bias at you, where they say, this is what's going to happen in the future. I don't like that. I want to know what the different options are. That way I can kind of come up with a conclusion in my own mind and really just understand what's possible. That's why I want to go over 3 potential options. Option 1 is we could see a full recovery. Option 2 is we can see an extension of government aid, and option 3 is what I call the uh-oh option, and you'll see what that means in just a minute. Let's start here with the recovery, okay? The reason that a lot of people are not able to make their mortgage payments is because a lot of people are out of a job. And so if the economy recovers before this forbearance program ends and people get their jobs back and they start making money, then they should be able to make their mortgage payments again. And if that happens, then we could see a full economic recovery with really no issues because people have money, they can make their mortgage payments, and the housing market continues to boom. Option 2 is we see an extension of government aid. Now, this is all just speculation. I have absolutely no idea what the government's gonna do. That is probably one of the most difficult things to predict. What is the government gonna actually do? Because we've seen them try to pass a stimulus bill for, at least 6 months and not get that passed. So I have no idea what this means. But some things that it could mean, again, I don't know this for sure, but some things that it could mean is you could potentially see a bailout for struggling homeowners, maybe a cash payment for them, or you could see an extension in this forbearance program. I really don't know. The whole idea is if the economy has not recovered, then the government could come in and say, you know what, we're not going to let the housing market crash, so we're going to create more programs to let people stay in their homes and not get foreclosed on. The likelihood of this happening is going to depend on really just jobs. If the economy is recovered, then we're not going to need more government aid, but if the economy is not recovered, then there's a chance that the government's going to pass more stimulus programs. This gets very tricky because of the whole health pandemic going on and because of all the lockdowns that we're starting to see creep up again, because like for example, in the state that I live in, our state has just shut down all indoor dining in restaurants. It has shut down bars, it's shut down movie theaters. And so now if you work at one of these places, you have probably just lost your job again. And so a lot of people just lost another income stream again. And if you don't have an income stream, now you don't have money to make your mortgage payment. You don't have money to make your car payment. You don't have money to go out shopping. And if you don't have money to go and spend, that means now there's less money flowing in the economy, because if you're not shopping in stores, that means a lot of people are probably not shopping in stores, which means store owners are probably making less money. And if store owners are making less money, then they have less money to pay their mortgages, to pay their bills, and to go spend at other stores. So the whole economy is kind of intertwined together. And if this health issue gets worse, then there's a good chance that we could see more lockdowns kind of creep up. If we see more lockdowns happen, we will see less jobs. If we have less jobs, then we have less people that are making money. If we have less people that are making money, we have less people that can afford to make the mortgage payments. If we have less people that can afford to make the mortgage payments, then we have a bigger housing crisis. And then the government has another reason to push more stimulus, which could be one of those things that I just talked about. Again, I don't know what it would be, but that's what's possible. Now, before I get into this, I do want to let you know that there's a very good chance that a housing market is going to continue to boom for at least the foreseeable future. I have a video coming out on it pretty soon. So if you haven't subscribed to our YouTube channel yet, make sure you do that, because you don't want to miss that video. Now, let's talk about this, the uh-oh factor. I feel like a little kid when I say that. But this uh-oh factor is, okay, the economy has not recovered because people still don't have jobs, people are still struggling to make the mortgage payments. And now the government either decides that we don't want to pass any more stimulus aid, or we can't afford to pass any more stimulus aid, or the government just can't come to an agreement to pass any more stimulus aid. So now we have millions of homeowners that are struggling because they don't have a job, they don't have an income, they don't have the means to make the mortgage payments, and at the same time, there's no government aid. If that happens, now you run into an uh-oh situation where there are millions of homeowners that don't have the means to pay their mortgage payments. The reason why I call it uh-oh is because right now there are about 3 million homeowners that are not able to make their mortgage payments. Now, again, we don't know how many of these people are choosing not to make their mortgage payments and are just choosing to be in forbearance, and how many people are really struggling and cannot make their mortgage payments. But right now, 3 million homeowners are in forbearance. Back in 2008, it was about 2.3 million homeowners that received a foreclosure notice. So this was 2.3 million homeowners that could not afford to make their mortgage payments. So that is why I call this an uh-oh situation, because we remember how painful this 2.3 million people not being able to make their mortgage payments was for the economy and the real estate market. Now, again, this doesn't mean that you need to be scared or start freaking out about the real estate market, because again, this number really doesn't mean anything. The real number that's going to matter is how many people are still not able to make the mortgage payments when this forbearance program ends. But I do want you to be aware of this, because if come 2021 and this pandemic is over and people still don't have jobs and the government cannot come together to come up with a stimulus plan, then yeah, we could see an uh-oh situation, assuming that the majority of these people do not have the means to make the mortgages and that they're not just in forbearance because they want to be. So for those of you thinking about buying a home right now, this doesn't mean that you shouldn't go buy a home, okay? What this means is you just need to be aware of what's happening in the real estate market, and you just want to make sure that whatever you're buying, you can afford. Nobody wants to see a repeat of 2008. That's why the government is working with the Fed and banks to see what they can do to avoid that from happening. So don't make your decisions to buy or sell a home based off of what could happen in the future. Just be aware of what's going on and only buy what you can afford. If you enjoyed this video, here's the video that I think you'll love. And while you're at it, make sure you subscribe to our YouTube channel and join our free finance and business newsletter. And as always, keep hustling. Let's dissect the anatomy of a real estate crash, that we understand what a real estate crash is and what could potentially cause it. So a real estate crash, when people talk about a housing market crash, is when you see a 20%